Welcome to CryptoCore, your cryptocurrency navigator. We are diving deep into the market dynamics as of Thursday, November 27th, 2025, precisely at 12:01 a.m. UTC. We will start our analysis of cryptocurrency prices quickly now.
It has been a really wild week. But what's surprising is the resilience. After that really dramatic plunge over the weekend, we've seen this powerful corrective move. It's something I think investors really needed to see.
Absolutely. It definitely calms the nerves a bit. And we want to, get right to the most critical insights for you. So here's the core message for this deep dive. The market has bounced back and bounced back hard. It's overcome that weekend crash and is reclaiming that absolutely critical $3.1 trillion total market capitalization.
Right. And Bitcoin is leading that charge.
It is. It's trading robustly at $90,508, and it's really trying to settle in above that $90,000 mark. Ethereum is right there with it, recovering to $3,028.
And this recovery, it isn't just retail FOMO. It's being buttressed by some really strong institutional signals that suggest fundamental acceptance is actually accelerating.
Okay, so what's the big headline?
The headline news really is coming out of the U.S. The state of Texas has actually moved to purchase Bitcoin ETFs using public funds. And then domestically, we're seeing major movement from Korean big tech Naver and KakaoBank, which signals a very serious, very strategic entry into the crypto infrastructure space.
But, before we all get a little too comfortable, there's a big flashing red light we have to analyze, and that is the sharp increase in derivatives open interest, or OI.
This is the big one.
This surge just indicates that high leverage is back in the market, and it's back aggressively. It really sets us up for potentially extreme volatility, so we are going to unpack the full implications of this specific risk today.
And to guide you through this really complex landscape, our deep dive is going to follow a clear structure. We'll start with a comprehensive analysis of the overall market health indicators. Then we'll move into a detailed breakdown of Bitcoin and Ethereum performance, followed by our extensive global news briefing, a look at the technical indicators, some specific trading watch points, and then finally our comprehensive market outlook.
And since we produce this content for you daily, some of the context is ongoing, but staying with us until the end is really crucial to grasp the full picture and, the long-term implications of what's happening right now.
Definitely.
Before we jump into the numbers, if you find this deep dive valuable, please do hit that like button. It really supports our efforts in gathering and analyzing all this data for you. Also, a quick note. If our pace seems a little too fast or maybe too slow, you can always adjust the playback speed in your video settings. So let's start with that big picture view. The total cryptocurrency market capitalization. Today we're standing at $3.10 trillion.
That is a significant move up. It's a 2.99% increase, which is about $0.09 trillion, compared to the $3.01 trillion we saw just yesterday.
So the speed of this recovery is really the story here, isn't it?
It's the most critical factor right now. You have to remember the context. Just 5 days ago, on November 22nd, the total cap had plummeted down to $2.9 trillion. And even just 3 days ago, on November 24th, it was still struggling at $2.96 trillion. I mean, the market was genuinely flirting with a catastrophic break below that $3 trillion psychological barrier.
A level that would have triggered a lot of panic.
A huge amount of panic.
Yeah.
The fact that we've recovered almost completely, and we're now nearly reaching last week's level of $3.11 trillion from November 20th. It suggests the market's underlying health is, well, much more robust than the price action of this past weekend suggested.
So it wasn't a fundamental collapse, it was more of a technical one.
Exactly. This swift V-shaped recovery signifies exceptionally strong demand at those lower levels. Someone was there, soaking up all that selling pressure with incredible speed.
Okay, so let's look at where that returning capital is flowing. Let's check Bitcoin dominance. On TradingView, it's sitting at 58.95%, and that's up 0.40% from yesterday's 58.55.
Right. And CoinMarketCap shows a very similar rise. It's up 0.5% to 58.30%. This rise in dominance is, well, it's a textbook post-correction pattern.
Meaning a flight to safety even within crypto.
A flight to quality, exactly. It tells us that liquidity, while it is returning, is primarily moving into Bitcoin, the largest, most established asset over the riskier, smaller cap altcoins. This indicates investors are still prioritizing risk management. Bitcoin is the first port of call for returning funds.
And how does that compare to a week ago?
Well, a week ago, November 20th, dominance was slightly lower at 58.60%. So the current concentration of capital shows that institutional, or the big money players, are focused very heavily on BTC for stability right now.
And we can see that caution reflected in the CMC 20 index, which of course tracks the top 20 altcoins. That index is currently at $192.68, up 3.13% from yesterday's 186.84.
And this figure shows a healthy, synchronized recovery. While Bitcoin is leading the way, the fact that the blue-chip altcoins are rising right alongside it means the positive momentum is spreading beyond just BTC. It reflects a broad-based improvement in market sentiment.
So it's not just a one-trick pony.
Not at all. And if you look at the comparison, 1 week ago, the CMC 20 index was at $193.30. So these top altcoins have recovered nearly all of their losses from the past week. However, and this is a big however, if you look back 30 days, the index was over $215.
Wow.
Yeah. That indicates that the overall depth of the correction in the large-cap altcoin space was very, very severe, despite this recent bounce.
Now, here's what I think is the most counterintuitive finding of the day. Despite this strong price move, the psychological indicators are, well, they're highly conflicting. The fear and greed index is fixed today at 15. That's totally unchanged from yesterday, still deep in extreme fear.
This is the massive tension point in the current market. You have to remember, the index is a lagging emotional indicator. So even though prices are up 3% today, the trauma from that recent brutal drawdown, which saw the index drop to 10 just 3 days ago, it hasn't healed yet.
So the money is moving, but the feeling hasn't caught up.
Precisely. Investors are not yet confident that the worst is truly over. This lagging sentiment, however, can be viewed as bullish.
How so?
A strong rally that happens while sentiment is still this fearful often implies there's substantial room for that rally to extend before the market becomes overly euphoric or, greedy.
Okay, that makes sense. And the altcoin season index seems to confirm that cautious stance. It's also unchanged, sitting at 25.
Yeah, this is directly related to that high Bitcoin dominance we talked about. This low reading confirms we are nowhere near a full-blown alt-season rotation. The market is just focused on risk mitigation and large-cap recovery.
And for context,
we were at 30 just a week ago and 45 a month ago. So the market's current focus on dominance and the lack of an alt season shows investors are just not ready to chase those speculative gains yet.
Okay, now for what you call the big one. The most immediate short-term risk factor seems to be the surge in open interest, or OI. Perpetual futures OI has just surged from about 784 yesterday to 848 today. That's a massive jump of 63.52.
This requires immediate, serious attention. OI tracks the total dollar value of open, non-settled leveraged positions. A spike this dramatic happening immediately after a sharp recovery means one thing. High-leveraged traders have aggressively rushed back into the market.
And they're mostly betting on the price going up, I assume?
Mostly placing long bets, yes. And while they are betting on continuation, this rapidly increases the potential for sudden, violent volatility. We are now in a very high-risk environment for sudden liquidations that could generate significant price whipsaws, both up and down. It's a powder keg.
Okay, so a lot of risk building up under the surface. Finally, let's look at implied volatility. 4 is showing signs of cooling down, which maybe suggests a temporary respite from the panic.
It does. BTC IV dropped 2.75 points to 52.41, and ETH4 dropped 2.37 points down to 75.90.
And in simple terms, that means what?
The drop in IV means that the extreme, large-range daily price moves we saw during the crash are dissipating. The market is finding a short-term equilibrium around that $90,000 level. But, and this is important, the rapidly increasing OI completely contradicts this calming signal. It implies that while the underlying price discovery is momentarily stable, the heavily leveraged positioning makes the whole structure extremely susceptible to any external shock.
A calm surface with a furious current underneath.
That's a perfect analogy.
All right, let's zoom in and focus specifically on Bitcoin. Today's price is $90,508. That reflects a strong 3.62% increase over yesterday, successfully reclaiming that $90,000 psychological level. And this brings the market cap back to $1,806 billion.
The daily bounce is highly, highly encouraging. But the severity of the prior adjustment means we have to look at the historical context. While today's gain is 3.62%, our 7-day return still sits at negative 1.02%.
So even with this big jump today, we're still slightly down on the week.
Exactly. It means that despite this fierce V-shaped rebound, we haven't quite reached the level we were trading at exactly 1 week ago. We were at $91,435 on November 20th. The recovery is substantial, but it's not yet complete relative to the prior week.
And the mid to long-term damage is very apparent when we look further back. The 30-day return is a deep negative 20.67%, and the 90-day return is nearly identical at negative 19.53%. The annual return is still negative at 3.11%.
These significant negative figures, they really underscore that the crash was primarily driven by aggressive deleveraging and forced liquidations, rather than some slow, fundamental deterioration of the asset.
It was a technical event, not a fundamental one.
Precisely. And the contrast is stark. Exactly 1 month ago, on October 27th, the 30-day return for Bitcoin was actually positive, around plus 4.75%. To lose over 20% in that short window shows a dramatic and sudden shift in short-term market dynamics, specifically driven by weakness in the derivatives market.
Okay, and what about volume? The 24-hour trading volume supports the rebound narrative, right? It's up 2.56% to $66.5 billion.
It does, and the daily price range was extremely wide. It moved from a low of $86,445 to a high of $90,571. That's a volatility spread of over $4,000 or 4.77%.
So that $90,000 level is still a battleground.
It absolutely is. However, the strong bids that materialized around that $86,000 level were key. And we need to examine the psychological anchors that really supported this rally. Two institutional narratives provided crucial confidence here.
Okay, let's break those down. First, the news from the state of Texas.
Yes. The purchase of $5 million worth of BlackRock's IBIT ETF by the Texas state government, which was reportedly executed around the $87,000 price point, provided a massive symbolic floor for the market.
So it's less about the amount and more about who was buying.
100%. This move signaled to the entire market that public treasuries, actual state governments, view this price level as a strategic buying opportunity for a legitimate reserve asset.
Yep.
It's really hard to overstate the psychological power of a state treasury buying the dip like that.
Right. And second, you mentioned the clarification from MicroStrategy, MSTR.
Yes, MSTR's public statement was a critical de-risking factor. Amid the crash, fears of a large institutional forced liquidation were rampant. Everyone was worried MSTR would have to sell.
The doomsday scenario.
The doomsday scenario. MSTR completely alleviated those fears by confirming that even if Bitcoin dropped dramatically to $25,000, their debt coverage ratio would still stand at a comfortable 2.0x NIC. This assurance removed that major liquidation overhang and allowed institutional buyers to step back in with confidence.
If you're finding our analysis helpful and detailed, please consider showing your support by using the heart-shaped thanks button below the video. Your contribution helps immensely with the intensive data gathering and analysis required for this daily deep dive. Okay, let's move on to Ethereum. Today's price is $3,028, up 2.37% from yesterday, successfully pushing us back above that $3,000 threshold. Market cap stands at $365.4 billion.
Ethereum's immediate rebound was slightly less intense than Bitcoin's, but its stability is notable. Its 7-day return is nearly flat at plus 0.2%. That means it has almost perfectly recovered the price level it held 1 week ago, which is $3,021.
So even though it didn't jump as high today, percentage-wise, it's basically back to where it was a week ago.
Exactly. So while it didn't outpace Bitcoin's percentage gain today, it demonstrated real consistency in reclaiming that lost ground.
But the long-term context here shows a deeper struggle. Ethereum's decline over the past 30 days was significantly steeper than Bitcoin's. The 30-day return is a painful negative 26.48% compared to Bitcoin's negative 20.67%.
It is. And the 90-day return is even worse at negative 32.86%, with the annual return still negative at 9.15%.
So what does that underperformance tell us?
This greater severity in it's called the altcoin correction, confirms that when a market-wide sell-off occurs, liquidity retreats from the more complex or perceived riskier assets first. The loss of nearly 27% in 1 month, especially compared to its positive 3.49% 30-day return just a month ago, highlight how aggressively money pulled out of ETH and ETH-related products during that deleveraging cascade.
It suggests there was more speculative capital in Ethereum to begin with.
A much higher concentration of speculative capital that was very quick to exit at the first sign of trouble. Yes.
Now, the trading volume dynamics are also a bit of a concern here. Bitcoin saw a rise in 24-hour trading volume, but Ethereum's volume actually decreased by 8.15% to 21.43 billion.
Yeah, and that's a red flag. A price rise on falling volume suggests a weak move. It's possibly driven by short covering rather than fresh committed capital coming in. The real buying power may be concentrated solely on Bitcoin for now.
And the daily volatility.
It moved from a low of 2,892 up to 3,038. That's a 5.05% range, which really emphasizes that $3,000 remains a critical pivot point where strong buying and selling pressure are colliding.
Okay, let's talk about that conflicted supply and demand picture for ETH. On the bearish side, we have an Ethereum ICO whale who recently sold 20,000 ETH worth about $58 million. That adds consistent selling pressure.
That whale selling is a persistent headwind, right at that $3,000 level. It's like trying to run uphill. However, the fundamental tailwind is the upcoming Fusaka upgrade, which is scheduled for December 3rd.
Can you elaborate a bit on the practical impact of the Fusaka upgrade for our listeners? What does it actually do?
Certainly. The core of Fusaka is the introduction of something called peer DAS, Now, this is a highly technical mechanism, but it's designed to significantly improve data availability for Layer 2 scaling solutions.
Okay, so in simpler terms.
In simpler terms, it makes L2 transactions cheaper and allows the network to handle vastly more throughput. It's a foundational long-term technical improvement that really solidifies Ethereum's competitive edge, and that serves as a strong fundamental price floor, mitigating the impact of short-term whale profit-taking.
So it's a battle between transient selling pressure and a permanent technical advancement.
That's the perfect way to frame it. Okay, now we shift to our global briefing. We've synthesized and analyzed reports from multiple media outlets. This is the consolidated material CryptoCore has gathered and processed for you. We've grouped the major news points into 3 key thematic areas: regulatory tailwinds, institutional adoption, and market structure shifts.
Let's start with the first theme, regulatory and political tailwinds. These are the political and economic factors driving optimism. And while the strong U.S. labor market, evidenced by jobless claims hitting a low of 216,000, provides a stable macro background, the real potential market catalyst is the political maneuvering in Washington.
That's right. The market is intensely focused on the potential nomination of Kevin Hassett as the next Federal Reserve Chair under President Trump.
And what's his background with crypto?
Hassett is a clear crypto proponent. He holds Coinbase stock valued in the millions. This isn't just a friendly face. It suggests a deep philosophical alignment with the crypto space. He's not just tolerant of it, he's invested in it.
And from a policy perspective, Hassett is classified as a dove, favoring aggressive interest rate cuts. His potential selection is seen as a powerful macro bullish signal, implying future monetary policy would prioritize liquidity expansion and regulatory certainty over tight control.
This is a high impact factor. It directly influences the potential for the next bull cycle. It could be the spark.
And we're also seeing accelerating regulatory clarity globally, right?
We are. Japan has formally moved to integrate crypto under its Financial Instruments and Exchange Act, the FIEA. This paves the way for institutional investors to finally enter the market and dramatically increases the probability of Bitcoin ETF approvals in Japan.
And we're seeing other nuanced adoption strategies worldwide. The UK's FCA launched a dedicated sandbox for stablecoin companies, showing a clear path toward regulated innovation.
Meanwhile, Bolivia, which is dealing with critical dollar shortages, has taken an even bigger step. They're integrating cryptocurrencies and stablecoins directly into their national banking system as a solution to currency instability. They're using it as a tool.
But not every country is on board.
No, and we have to note the caution from some emerging markets, like the South African Central Bank. They warned that the rapid surge in stablecoins could pose systemic risks to their financial stability. This duality shows that while adoption is accelerating, global regulators remain highly cautious about losing sovereign currency control.
And finally on this theme, the political entanglement in the U.S. is worth noting. A House Democratic report alleges President Trump earned over $800 million from crypto ventures in the first half of 2025.
Yes, and this development underscores that cryptocurrency is now a primary political flashpoint in the United States. While the market generally favors any political interest, this introduces significant regulatory uncertainty and volatility, as future crypto-related legislation may be held hostage by partisan conflict. It makes the space a political football.
Okay, let's move to our second theme, institutional adoption and public balance sheets. This is spearheaded by that landmark news out of Texas. The Texas state government officially purchased $5 million of the BlackRock IBIT ETF as part of its strategic Bitcoin reserve, reportedly buying the dip around $87,000.
This is a monumental shift. It is the first time a U.S. state treasury has included Bitcoin directly on its balance sheet. It's a far more fundamental stamp of approval than a typical pension fund investment.
It's the state's own money, not just an investment fund they manage.
Exactly. And furthermore, the Texas Blockchain Council stated very clearly that their ultimate objective is self-custody. This move validates Bitcoin as a legitimate, strategic public reserve asset, and it sets a powerful precedent that other state governments are likely to follow.
Okay, now let's look at MicroStrategy, whose financial structure really affects the entire market sentiment. Although they assured the market their debt is safe even at $25,000 Bitcoin, they recently failed to meet the criteria for S&P 500 inclusion. They missed 4 consecutive profitable quarters.
Right, so MSTR proved its balance sheet strength, but the failure to achieve S&P 500 status and the fact that its stock is currently trading at a discount to the underlying Bitcoin value, those are bearish structural signals.
So investors are no longer willing to pay that premium for MSTR stock just because it holds Bitcoin.
The premium has evaporated. And this situation is compounded by warnings from firms like JP Morgan that MSTR could be removed from the MSCI index in January 2026. This creates the risk of forced selling by passive funds, which could potentially equate to billions in outflow. It's a major overhang.
And we also need to analyze the controversies surrounding Tether, USDT, which received a stability rating downgrade from S&P to weak or grade 5.
Yes, S&P criticized Tether for exceeding safety buffers. They specifically pointed to their allocation of Bitcoin, which is 5.6% of reserves, and other high-risk assets, which make up about 24% of their total reserves.
And Tether's response.
Tether strongly rebutted this. They emphasized their substantial holding of 116 tons of physical gold, which is a considerable sovereign-level reserve size. This conflict really shows Tether's evolution. It acts more like an aggressive hedge fund than a simple payment provider,
Which provides strong price support for Bitcoin.
but increases tension with regulators who are concerned about that high-risk reserve allocation. It's a double-edged sword.
Okay, our third theme, market structure and Asian influence. A major structural shift is occurring in the Korean market. Never Financial announced a massive $10.3 billion stock swap deal to acquire Dunamu, the operator of the dominant exchange, Upbit.
This represents significant consolidation.
Yeah.
If you think about Naver's expansive platform power covering search, commerce, financial services, and you integrate that with Upbit's market liquidity, well, the incorporation of crypto into South Korea's daily economic infrastructure will accelerate rapidly.
It could position the South Korean market as a cutting-edge global testbed for real-world crypto applications.
It absolutely could. And in immediate competitive response, their rival, KakaoBank, is developing its own Korean one-backed stablecoin, tentatively named Kakao Coin, while simultaneously preparing to launch STO, or security token offering, products.
So both Korean tech giants view crypto not as a speculative novelty, but as the future core of their financial and payment infrastructure.
That's the key takeaway.
Yeah.
And we need to monitor if these strategic moves trigger increased trading volume and a subsequent altcoin rotation, specifically within the Asian trading session.
We also saw an interesting development regarding enterprise blockchain. The Swedish fintech giant Klarna launched its stablecoin, Klarna USD, but chose the specialized Tempo blockchain over Ethereum.
This is a key indicator of the enterprise blockchain's trend. Although Klarna's CEO praised stablecoins for cheaper cross-border payments compared to banks, the decision to avoid Ethereum, a public chain with inherent transaction transparency, suggests something important. It suggests that large corporations still prefer the control, the privacy, and the permissioned environment of an app chain for their proprietary financial products. This represents a long-term challenge to Ethereum's ambition for universal dominance in that sector. Okay, now for a concise summary of the critical technical levels and patterns for our two core assets.
Let's start with Bitcoin. It has completed a strong V-shaped rebound pattern, which confirms robust demand at the recent lows and signals a confirmed short-term bottom.
Technically, the 14-day RSI is comfortably in the 55 to 60 range, which indicates strong momentum without being overbought. And crucially, the Mankey D has generated a golden cross, which lends significant credence to the current bullish short-term movement.
And where are we with moving averages?
The price is challenging the immediate resistance at the 20-day and 50-day exponential moving averages. Confirming a hold above $90,500 is the immediate goal.
The next key psychological and technical hurdle, then, is clearing that $92,000 previous high.
Exactly. Absorbing that overhead supply will be necessary for any sustained upside continuation.
Okay, what are the key patterns you're seeing for Ethereum?
Ethereum is exhibiting a potential double bottom pattern on the 4-hour chart. That's a classic bullish reversal signal. The 14-day RSI bounced hard from the oversold level of 37 and is now stabilized in the neutral 50 zone.
Any other indicators lining up?
Yes, the stochastic oscillator has also generated a golden cross, which mirrors BTC's recent momentum shift. So you have a few things pointing in the same direction.
And the $2,800 level was clearly established as short-term support during that drop.
It was. But long-term investors should note that ETH remains below its 200-day EMA, which indicates a structural weakness on the higher timeframes.
So what's the key resistance zone everyone should be watching?
It's the $3,100 to $3,200 range. This area represents massive supply volume from previous breakdowns. Ethereum needs to break and hold this ceiling with powerful volume to signal a genuine trend change and show relative strength against Bitcoin.
All right, based on all of that technical and fundamental analysis, let's nail down the 3 core trading watch points for the immediate future.
Watch point 1. Confirming the $90,000 floor and managing OI risk. That critical surge of 63.2 points in open interest means extreme volatility is priced in. It's a given.
So traders must observe the price action around that $90,000 level very closely. If it fails to solidify a sustained support over the next 48 hours, the highly leveraged long positions could be rapidly liquidated,
leading to an aggressive wick down to retest that $88,000 level. Risk management around leverage is absolutely paramount this week. You cannot be over-leveraged in this environment.
Okay, watch point 2. Ethereum's Fusaka momentum versus the $3,100 ceiling. The technical narrative surrounding that December 3rd upgrade must be validated by price action.
Exactly. We need to see if the fundamental excitement can actually overwhelm the supply resistance we just talked about.
So a decisive move above that $3,100 resistance mark would signal a favorable rotation and a strong decoupling, suggesting that the long-term technical improvements are finally gaining market traction.
It would be a huge sign of strength for ETH. And finally, watch point 3. Monitoring the Asian market liquidity shift. The major corporate news involving Naver, Dunamu, and KakaBank's stablecoin development needs to translate into real-world trading volume during the Asian session.
So we need to look beyond the headlines. Specifically, you're saying to watch the CMC 20 index.
Yes. If Bitcoin dominance remains high, but the CNC 20 index starts to significantly outperform, it would indicate that this Asian corporate interest is beginning to trigger an altcoin rotation. That would be the first tangible sign of the domestic big tech influence actually hitting the market. So let's consolidate all our findings for the short-term and medium-term market prognosis, looking at the wider context.
In the short term, the market is positioned in what we're calling a scenario of fearful recovery.
Right. The fact that the total market cap is robustly over 3.1 trillion, while the fear and greed index is stuck at 15, suggests significant underlying strength and, more importantly, room for expansion. The rally is not yet exhausted by greed.
And powerful institutional buys, like those by the state of Texas, provide a structural defense against deep corrections.
They provide a hard floor. However, given the heightened leverage in OI that we've hammered home, we anticipate a very choppy price action with significant wicks both up and down. The immediate objective for the market is simply to consolidate the $90,000 price point over the next 2 to 3 days.
And moving to the medium term, we believe the regulatory and political environment is the primary driving force for what comes next.
That is absolutely correct. The potential appointment of the crypto-friendly Kevin Hassett as Fed chair is the highest impact variable for 2026 liquidity and regulation. If this occurs, we could see a rapid shift toward a much more accommodative financial environment.
And globally, institutional adoption continues to lay the groundwork.
It does. From Japan's regulatory inclusion to the UK's stablecoin Sandbox, it's all building a fortified long-term foundation for institutional capital inflow. It's structurally strengthening the entire market, day by day.
So our final conclusion requires 2 key checklist items that investors must track to confirm the next major move.
First, Bitcoin must solidify $90,000 as an absolute, non-negotiable support level. It needs to become the new floor. Second, Ethereum must successfully execute the Fusaka upgrade and demonstrate a sustained breakout above $3,100, proving its fundamental strength and closing that performance gap relative to Bitcoin.
And these 2 variables are the ultimate indicators of whether the bull cycle is preparing for its next major push.
They are the key signposts to watch.
Okay, to quickly reiterate our key messages today. The cryptocurrency market achieved a vital short-term bounce, recovering $90,000. But the risk of short-term volatility from that high leverage, that OI, is extreme and requires very careful management. Long-term, however, the outlook is strongly bullish. It's fueled by aggressive institutional adoption from public funds like Texas, favorable political signals from the potential Fed chair nominee Kevin Hassett, and major infrastructure commitments from Korean big tech. That concludes our deep dive analysis for today. Here at CryptoCore, your cryptocurrency navigator, we are committed to providing you with the most current trends and the most comprehensive analysis every single day. If you found this content insightful and helpful, please don't forget to subscribe, hit the like button, and turn on notifications.
We want to acknowledge the various media reports that CryptoCore compiled and analyzed to produce today's deep dive. For further details, please refer to the respective media sites. Crypto Daily 2025-11-26 Texas makes landmark Treasury move. With $10 million Bitcoin allocation, Cointelegraph 2025-11-26 Texas buys the Bitcoin dip, acquiring $5 ounces of BlackRock's IBIT.
Crypto Potato 2025-11-27 strategy assures bondholders. Bitcoin reserves cover debt nearly 6x. DL News 2025-11-27 S&P downgrades Tether's stability rating to weak.
Lave Newcoin 2025-11-27 Naver to buy Upbit owner Dunamu for $10.3 billion. Cointelegraph 2025-11-27. Who's Kevin Hassett, Trump's reported crypto-friendly pick for the Fed? Crypto 2025-11-27 Bitcoin reclaims $90, but on-chain data warns the rally may not last. Crypto Potato 2025-11-27 Japan emerges as potential Bitcoin demand giant after rule changes. News BTC 2025-11-27 Ethereum ICO whale sells 20,000 ETH. Amy Crypto 2025-11-26 House Democrats allege Trump made $800 from crypto ventures.